Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily and weekly charts and instead concentrate on the longer term view using my monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, let me now introduce today's longer term chart.
Today I'll be looking longer term at London cocoa. From the April 2024 all-time high, a high that was so interesting. First as a huge long-legged indecisive spinning top pattern. Secondly as part, just about, of a 3-month bearish evening star pattern. Well, we saw the market drop down to overshoot on the downside. The 50% absolute Fibonacci line at 49.91. And halt just short of the 2-year moving average, currently at 60.45, before turning back up in October 2024 with a bullish double. From there, prices built a base to attempt a fresh move higher, up to not quite the heights in December 2024, seen back in April that year. It did raise a question back then as to whether the move up was a double top or a potentially very large bullish half hesitation. The answer was a large double top. I did say last year, and it was a conservative quote considering prices were then in the 87.12 area, and I quote, "So if it is a double top, then we may see prices testing back down to below that 50% absolute Fibonacci line at 49.91 and below the low for late 2024 at 42.96. End of quote. This was at the time a significant suggestion with an ultimate potential drop of around 50% of its value. Well, since then we have seen that drop with prices being somewhat bracketed between the overhead and still rising mauve 3-year moving average, currently at 49.76, and the rising but at a slower pace I should say, gold 5-year moving average, currently at 36.96. I suspect that this gold 5-year moving average, along with the 38.2% absolute Fibonacci line at 38.14, may be starting to try and halt the decline seen throughout 2025. There's also another factor which I would like to introduce, and I crave your patience on this as it requires a little explanation. You see, after the second peak in December 2024, the market gave me the opportunity to draw a very acute dark blue April to December 2024 bearish Andrews pitchfork. The dark blue upper tine, which is currently at 39.77, and the dark blue middle tine, currently would you believe at 9.12, had been excellent in showing the bearish angle of attack lower. However, the bearish Andrews pitchfork is way too steep to be sustainable. But apart from the occasional breach, there were no closes on or outside the upper tine until this past December, when the market closed for the first time right on the upper tine. And now in January 2026, it looks like the market is trying to establish itself over and outside the dark blue upper tine. These actions prompted me to draw a shallower, bright red bearish shift pitchfork for the same move as the bearish Andrews pitchfork, something I'm usually loath to do, but it was right and appropriate for me to do so, as in addition to the support seen at the low in November, namely the 3-year moving average and the 38.2% Fibonacci line, absolute Fibonacci line, we also had the bright red lower tine, which is currently at 34.81, added to the mix. This has led me to believe that possibly, just possibly, the market may now be transitioning from the steep bearish dark blue Andrews pitchfork onto the shallower but still bearish shift pitchfork for the same move. I do not as a rule like drawing the two types of pitchfork on the same chart. For me it is one or the other. And as for highlighting both, well, I like that even less. However, to show what I suspect is the transition taking place from that steeper dark blue bearish Andrews to the less steep yet still bearish shift pitchfork, right at this time, well, I decided to make an exception in this case.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.